All right, guys, good morning. Good morning. Welcome aboard to the morning note. It is Monday, February 6th, 2023. Thank you so much for taking the time out of your day to join me this morning and every morning, 9 a.m. Eastern Standard Time here on our YouTube channel. Before we begin, bottom right-hand corner of your screen, little black logo of ours. Click on that. Turn on notifications, subscribe to our channel. Make sure to hit that like button if you like these videos. Really do appreciate it as always. Hope everyone had a great weekend. Let's go ahead and get started on the market. Pardon my voice a little bit. I woke up with a little bit of a cough, nothing too wild. I mean, light fever, not really sick, but a little bit tired, but I'll be okay. My voice sounds a little messed up. It's just because I'm fighting that. I just took some Advil. I'll be all right. All right, Dow futures down 179 points this morning. NASDAQ down 0.96. S&P down 0.74, and the Russell down 0.81 this morning. The dollar is up this morning 0.44% at 103.37. 10-year treasury yields are up 3.627. That means there's a bond sell-off. VIX is at 1955, up 6.66%. Not the best number, obviously. Crude oil is up 0.74% even with a stronger dollar. 73.98 a barrel. $2.32 for gasoline futures. Gold futures are up 18.85 right now, up 0.44% even with the stronger dollar. Silver futures are a little flat-ish, little red, 22.36 an ounce. Copper futures, $4.03, up down 0.46%. Euro dollar is down 36 pips, 107.56. Dollar yen is up 135 pips, 132.54. We talked about that yen and yield correlation a couple of weeks ago. So again, when the yen is down, meaning the dollar yen is up, that's when yields are higher in that correlation. Pound dollar 120.47, that is flat currently. Bitcoin futures 22,920, down 2.41%, and Ethereum 1636, down 1.8% this morning. So really the main driver this morning is the dollar currently. Let's go ahead and chart it together. We've talked about this many times, how important the dollar is in terms of the stock market. Right now, we're still below the 50-day moving average on the dollar. We bounced off that support around 101.54. Keep in mind, we still have the death cross, the 50 below the 200. So again, a little bit of a bounce is not something to be extremely worried about in my opinion, but again, something to be vigilant for. So again, if you do break 103.85, which is your 50-day moving average, you're talking about possibly getting to 105 on the dollar and then accelerated weakness in the S&P. So let's go over the S&P 500 together, even though we do know with the dollar being up is hurting equities, at least short term. So here's a 1-hour chart. I posted this on Twitter this morning. And again, a very nice, we broke down below, obviously at the end of the month, but again, a pretty structured trend line in this green line here on the hourly chart on S&P 500. Let's see if we hold above 4,100. That's something that I'll be watching this morning. And if that does break down, we're watching 40.83 as your next possible support. That's your 200 MA on the 1 hour. But again, as of right now, being your real support is the previous resistance, which is that trend line here around 4,000. So again, just be cognizant of that. Again, we're still above that trend line. We're still above the 200 MA. We're still above the 50. We're still above the 20 MA on the daily. So again, don't expect just a straight shot to 5,000. Like I've been saying, the dollar is going to, obviously move here and there. So again, if that does happen, that's where we have the S&P 500 come down a bit. If you take a look at SPY, we do have a gap to fill at 421.22. We did not fill that as of yet. I expect to fill that at least relatively soon. We'll place the little gray box there. So again, we got pretty close, but we did not fill that gap yet. So that's our level we're looking for, around 420.99 if we do bounce. And if we don't, again, we're going to be watching to see if we break this trend line. Again, similar on ES, same on SPY. So again, we could take away this this trend line here, and you could see pretty structured, but let's see if we stay above it. Let's go ahead and take a look now at the dollar. I mean, not the dollar, QQQ. QQQ, kind of very similar trend line here. We could draw it together. Let's go ahead and do that. And we could start from here. You can pretty much just kind of set that up there. Click there. We'll extend it to the right. And you can see we have the next support right around 295, if not 296.87. The last time that I did play QQQ shorts, just as a reminder, was last week. It did hit my target but again, pre-market. So really, the dips have been bought at least in 2023. So again, just going into puts right away, make sure you're breaking the levels that you're looking for. Make sure you're finding some volume that for those option contracts so you can actually sell them. Let's take a look at the 10-year in terms of TNX. 10-year did gap up, and again, you see we do have another gap here. We filled this gap here. If we go to the daily chart, going to expand it up a little bit, we're now above the 50 moving average. We still have the 100 moving average there. I'll place an alert on the 10-year yields if it gets above that. And again, if we do see that, then we expect more weakness, and then we'll keep an eye on any kind of puts that we can play. The puts that we're looking for, anything that's gone higher in the recent couple of days, those high betas, again, anything NASDAQ, anything tech, those are the names that are going to be taking a hit first. So again, any mega cap tech that has been on the move higher, semiconductors or such, maybe Meta and Tesla, all those names. Again, if we come back down, those are going to be the first ones to fall down with the market, as that they have been outperforming in 2023. I want to go ahead and show you guys rather quickly again the seasonality chart. Very, very important. This is for 2023 pre-election year. Again, we do know that we'll have a little bit of a dip in the mid-February, maybe this week, maybe next week, and then towards the tail end. Keep in mind that next week is CPI, next week is OPEX. So again, expect more volatility. We'll see how this week goes moving forward. But again, do not be surprised if we fall a little bit more. Maybe the dollar bounces back a little higher. Maybe we do test that 50 moving average on the dollar. Maybe we test that 100 moving average on 10-year yields. And then we could possibly get back to around the mid 40, 50, if not 4,000 level. Again, that seems to follow that script in terms of the seasonality. Let's go and take a look at what we're expecting this week in terms of economic data. A lot of the major earnings reports did come out, at least with mega cap tech, in terms of the heaviest weighted S&P 500 names. So let's go to this week's economic data. We have Fed Chair Powell speaking tomorrow at 12. We have more Fed voters that are speaking. FOMC member at 2 p.m. FOMC Barr, that's his name. Tomorrow we also have, or today, we have President Biden speaking. He's due to deliver the State of the Union address. I want to say it's today. We can make sure that I thought it was tomorrow. We also have member Williams speaking. Barr speaks again. 10-year bond auction. Member Waller speaks on the 8th. 30-year bond auction on Thursday. Unemployment claims and University of Michigan consumer sentiment. So at least in terms of economic data this week, nothing really earth-shattering like we had last week, where we had the non-farm payroll report, and then also the actual earnings from the mega cap boys, the Teslas, the Apples, the Metas of the world, and the Amazons and the Googles. But at least for this week, again, all you're going to get is Fed speak. So again, we'll keep an eye on any kind of Fed speak and what they say in terms of the market or in terms of future monetary policy. We'll make sure to tweet that out to you. So again, if you haven't already, make sure to follow us on Twitter. It is free at GAR Capital. If you are interested, turn on notifications so you don't miss any kind of news moving forward. Other than that, guys, it's really just a positioning day. I only have IWM calls open. Let's go and take a look at IWM together. And IWM is still kind of holding up. I do have the 200 calls, so let's see if we can hold up above 193.98. If we bring up the daily chart, you can see that we still have this gap here right around 258. That's really my target. Still a nice chart. Again, still above 193.98, above that 61.8 fib line. The main resistance level was right around 187.55. Even if we do pull back a bit, as long as we stayed above 194 to 195, I think we're going to be okay. And you can see 195.40 is the current bid. 193.98 is that support. That's 61.8 fib. So I'm willing to hold this trade a little bit and see where we go. Maybe we get a little bit of a bounce if the dollar can pull back a bit. The last time I had shorts, again, I just want to have a reminder, we hit that target around 7 in the morning, and then we started bouncing towards the open of the market. That's what happened to me last time I had puts on Qs. It was an actual hedge against any kind of craziness with the FOMC and NFP, but it didn't work out, which was okay. That's what insurance is for, and we expect really just not much moving forward. I mean, we'll get some movement here and there, but in terms of major news, next week's CPI and next week's OPEX will probably be the big thing. But in terms of this week, just some Fed speakers. Again, that'll add some volatility. We have President Biden's State of the Union address. I believe it's either today or tomorrow. And we have some other data like the 10-year Treasury bond auction, 30-year Treasury bond auction, and University of Michigan sentiment on that will be on Friday. Other than that, it's really just a technical base type of day. We're really just going to be observing and seeing if there's any kind of opportunity out there. Just want to reiterate the point that 4,000, the previous trend line that we broke above and we settled above, that is your new support moving forward. Previous resistance becomes support. And again, we don't want just a straight shot every single day. That's going to be pulled back. You're going to have some sellers, you're going to have some buyers, but what we want is something like this, structured to the upside with a good trend line support, giving us higher and higher and higher moves. Again, especially if you're a stock bull. And again, we need the dollar to break below 101.97 so we can have at least that push on equities. So I wish I had more excitement for you guys, at least today, but there really isn't a ton of news, at least moving forward, at least this week, excuse me. So again, really just looking at the technicals, seeing the chart patterns and see if we have any kind of move. I wouldn't be expecting to trade much today. If there is something out there, I'll definitely let our Discord team know, and we'll go from there. So again, day by day, we're going to make it the best 2023 we can, the best year we can. And all we got to do is just be vigilant, keep an eye on the news, keep an eye on the charts, and stay consistent, keep the risk management. No need to go crazy on a Monday. Let's just observe and see what we get. We'll go ahead and leave it there, guys. Have a great rest of your morning. Hope everyone has a great Monday, and I will see you guys tomorrow for the morning note. I'll see you guys on Twitter as well for any kind of news that does come out. Really do appreciate it as always. We'll see you guys tomorrow. Cheers.